Hi everyone, thank you for joining. My name is Andrew and I work in the Grants and Incentives team at Fullstack. This is a short webinar on R&D tax and some of the things that we've been seeing in the R&D tax space over the last 12 months. The information in this presentation is general in nature and shouldn't be relied on when preparing your tax affairs. You should always seek legal advice and tax advice that's specific to your own circumstances. So just to start off, as a reminder, the R&D Tax Incentive is a self-assessed program. And what that means is that businesses that claim the R&D Tax Incentive are required to assess their own eligibility, which includes determining that their research activities qualify as either core R&D activities or supporting R&D activities. At the time that you're applying, you're not actually required to submit any documentation, but you are required to maintain documents which can be relied on later to prove that the R&D activities are actually carried out and that the claimed deductions were related to the registered activities. If you fail to keep records, that can lead AusIndustry or the ATO to find that the claimed deductions should be disallowed, and then that can lead to a shortfall in your tax liability for the income year. So there are penalties that are applicable if you get a shortfall amount, and penalties are graded depending on the reason for the misstatement or the shortfall, and they range from 25% of the shortfall amount all the way up to 75%, depending on the severity. So I also just wanted to discuss the effect of registration in a bit more detail, because it's something that we see applicants are often misinformed about. At the end of each financial year, you submit an R&D tax application, and the activities in the application are registered. There's some confusion that registration is approval of those activities. However, at the time that they're registered and you get your registration number, that's not a recognition that the activities are eligible. At that stage, it's only a recognition that the activities have been registered and that the administrative process of applying has been followed. Likewise, receipt of a refund doesn't mean that the activities were approved. The claim can actually be audited or reviewed up to 4 years in the future. The only way that you can actually get an approval or certainty about the eligibility of activities is by going through an advanced finding process, which is a separate application process that takes you out of the self-assessment pool, or is the other way is to go through a review or an audit and get an outcome from that that says the activities were eligible and the claim deductions were eligible. Next, I wanted to highlight some of the information we got about the R&D tax program through the transparency report. This was a report that was published in October of last year. We saw that the program results in $11.2 billion in deductions each year. Small businesses made up the bulk of applicants. 50% of all claims were small businesses. And the average claim size in that pool was around $400,000. Scientific and technical services also made up the largest industry that claimed. They made up 40% of claims and about 40% of the total spend. One of the biggest changes to come from the transparency report was the scrutiny on claims by tobacco companies and gambling companies. These got picked up by media after the transparency report because the ABN and the total deductions of businesses was published. And as a result of that additional scrutiny, the government introduced changes which excludes those activities for registration under the R&D tax incentive. And that's quite a big shift in the R&D tax incentive, because historically it's been industry agnostic, and no matter what industry you're working in, you could put in an application. But now that's effectively come to an end with these exclusions. So returning to some of the compliance activity that we've been seeing, we've seen an uptick in pre-issue checks. So that's checks before a refund is issued, but after the R&D entity has submitted their company tax return. So most of these have been triggered due to large associate expenditures. And for context, associates are other entities that are related to the R&D entity. So that can be individuals or businesses. And in order to deduct associate amounts, you have to actually pay the invoice within the financial year. There's also a requirement that the invoice you get from the supplier is at cost. So, for example, it's at the cost of the wages or the materials used in providing the service to the R&D entity. So there can't be any markup applied from the associate issuing the invoice to the R&D entity. As I mentioned just there, the invoice from the associate needs to be paid during the financial year, but there are certain arrangements which the ATO doesn't consider payment. So these arrangements include things like loan conversion. A loan conversion happens where an amount owed to an associate is an invoiced amount is just converted to a loan. The ATO says that's just converting a current liability into a non-current liability, and it's not considered payment. The second arrangement is an offsetting arrangement. So typically this happens with a second contract or a licensing agreement between the R&D entity and the associate. And effectively that license agreement creates a reciprocal amount owed by the associate to the R&D entity. And then at the end of the financial year, these amounts are basically cancelled. The ATO says that that's not payment. It has a question. We'll have questions about what the value of the licensed IP is if it's still in development stages. And the final category of transactions they don't consider payment is round robin transactions, and these are probably the ones which attract the most scrutiny, or that will attract the most penalties, additional penalties if they're detected. And these transactions are circular movement of funds between the R&D entity and the associate. So that's effectively using the same $10,000 to go between one and then the other, and sort of recycling it, and then at the end of the year saying we paid $100,000 of associate expenditure using that same $10,000. If those are detected, they'll attract extra penalties. So our recommendations in terms of ensuring compliance with associate payments is to get your invoices regularly if possible and make sure that they're at cost. And then the second thing is to pay those invoices regularly. So just paying them on commercial terms like you would any other supplier, rather than a large bulk payment at the end of the financial year for 10 or 12 invoices. So turning attention here to the record keeping requirements of the program, the random sample review was initiated last year, and that reviewed 200 random claims. The record keeping, there was some comment about record keeping in the program following that review. The ATO said that about 75% of claims were assessed as low or medium risk, about 25% to a high risk. But across the board, they said that record keeping in the program needed to be improved. So our key recommendations to strengthen your claim under review or audit is to keep detailed timesheets. That includes a narrative of the work performed, not just a spreadsheet of hours, because effectively a spreadsheet of just hours could be completed at any point. You should also keep records of prior art searches. So that would be things like screenshots of journals or screenshots of GitHub projects showing that you did research in the field and found that the R&D activities had to be conducted to develop new knowledge. The other thing that we would recommend is keeping developer correspondence. Often that's stored in emails, but under audit, having to do your emails just really delays the process. So as you're going through the correspondence with your developers, if you're just saving those into a file, that can show the progression of work throughout the year. Then additionally, on the technical side, you should keep things like your project reports, lab notebooks if you're doing lab work. The records that actually show that there was an R&D activity conducted and showing the day-to-day work of the people employed in those activities. And then just to go back on one of those, and probably the most important one, the timesheets are needed to claim salary and wages. Salary and wages is often the biggest expense category, and the ATO requires some form of evidence that proves the time claimed in R&D was actually spent on R&D activities by the employees. That can also relate to contractors if those contractors are employed on a regular basis. Without keeping some form of timesheet, it's basically impossible to satisfy the ATO that the claimed salaries in R&D have been claimed accurately or reasonably. So ideally, you'd want to keep some form of timesheet, probably weekly, and then again, including some narrative of work performed within the week that aligns with those core activities. So showing those hours have a sufficient nexus to the activities you're registering at the end of the year. And then just as a small aside, overheads, things like rent, are often claimed based on how much time employees have spent in R&D. If you sort of calculate the amount of time the average employee spends on R&D activities, and then you can infer how much of a facility's use was spent on R&D activities. And so, again, if you're not keeping accurate time records, then there are other expenditure categories which can sort of fail under review because you can't substantiate that the overheads have been calculated correctly either. So during random sample reviews, we've also seen that contractor payments received greater attention. Information that we've seen requested is the location of the service provider. So that's the location of the people that actually worked on the project, rather than just that the business was a registered business within Australia. It's a requirement that activities are carried out within Australia, and that means that the personnel who might provide some development service are actually located in Australia when working for the R&D entity. We've also seen the ATO request a description of the contractor's role, just so they can assess whether or not the work was R&D related. And then they've also requested all of the invoices that make up the claimed amounts. And then in pre-issue checks, which again are often triggered by high associate expenditure, the ATO has also increased the scope of those pre-issue checks to include other expense categories. That's led to requests for things like contractor amounts, breakdown of contractor amounts, as I've just mentioned. They've requested timesheets for employees claimed in R&D activities, and again, a description of the work performed by each of those employees. That's why the narrative timesheet is really important. They've requested the basis for apportionment of things like overheads and rent. Again, they're the claim relying on timesheet usually. And then finally, they've also requested bank statements to check the payment of associate amounts. They've also requested the ABNs of associates so they can see sort of related ABNs. And then they've also requested a scope of work contractor agreements with the contractor, with the associates. So within those, there'll be a description of the work to be performed by them. And they want to make sure that, if you're claiming 100%, the associate's invoice, and the contract will usually specify the tasks to be performed by them and that they had a sufficient nexus to R&D. If you do have any questions about this webinar or anything else R&D tax related, you can reach out to us. Our contact details for Fullstack and myself are shown on screen. So thank you, everyone.